Vanguard have a great selection of ETFs to choose from. Going on their website, there is a filter section that helps you choose a suitable fund. So we have region. I'm personally interested in global fund and the USA. Beneath this is a risk level filter as well. The higher the risk level, the higher rewards. But with risks comes volatility. Depending on your situation, how risk averse you are, you may want to choose a lower risk fund. I've been buying a couple of Vanguard ETFs. I'll start with the US stock, S&P 500 ETF ticker symbol VUSA. This has been around since the 22nd of May 2012. It has 32 billion in assets and 503 stocks. If we click on portfolio data, we can see some nice stats. Return on equity is high, and so is earnings on growth. Price to earnings is 22.1. If you are unsure on anything, it gives you some info on what the stats mean. So price to earnings means the share price of a company divided by the company's earnings per share over the past year. A high PE means investors expect strong future growth. With it being a US ETF, obviously all American stocks for the regions. If we look at weighted exposure, it breaks it down. Tech stocks are performing well, so happy with this. Then the full holding details. Apple, Microsoft, Nvidia all flying at the moment. AI really giving Microsoft and Nvidia a boost. Tesla making a massive resurgence this year as well. A lot of catalysts this year, Cybertruck, Model 3 refresh, and of course FSD getting closer to being solved. So the share price could go a lot higher. Other giants, Alphabet and Meta. Then a varied selection of staple stocks and high profit stocks. Notable mentions include United Health, JP Morgan, Visa, MasterCard, Chevron, Costco, Adobe, Netflix. A lot of individual stocks I would love to have in my portfolio. This gives me exposure to them, all while paying a dividend. Price and performance. It shows how the stock has performed recently. I'm not too concerned about this. I intend to hold it for decades. This ideally will be part of my retirement fund. If we scroll a bit further down, we can see how it has performed over 1, 3, 5, 10 years and since its inception, which is 2012. If we click through all of them, we can see a nice upward trend. Buying and holding was clearly the best play if we look at the 10-year and inception dates. For example, if you'd put $10,000 in 10 years ago, it would be worth $32,375, a 223.7% increase. Distributions gives information on the yield, which is 1.29%. Yes, the yield is low, but the stock price growth we've just seen counters that. Dividends are paid quarterly in March, June, September and December. If we'll have a look at the costs, there is a cost for setting up the fund through Vanguard. I personally purchase the shares through my trading platform. I have to pay a small fixed commission fee instead. I tend to buy a few shares at a time, so the small fee doesn't feel as bad, and the next dividend payment from the purchased shares will cover it. The second ETF I've been buying is the FTSE All World High Dividend Yield ETF. As it states in the name, this gives me exposure to stocks from all around the world. It started on the 21st of May 2013. It has total assets of 3.6 billion and a massive 1,770 stocks. From the portfolio data, the stats are lower in comparison to VUSA, with return on equity 13.1% and earnings on growth 10.1%. This is reflected in the price to earnings ratio. Regional exposure, still a lot of North America, but a good 53.5% exposure for the rest of the world. Market allocation includes just about anywhere you can think of, including emerging markets, which will become some of the biggest economies in the world in the next decade. If we look at weighted exposure, financials being a big section, the rest are nicely weighted. On the first page, initially a few stocks from VUSA, then really varied. It is amazing how many companies you know. There are quite a few on my watch list, some I've been seriously considering, and now at least I have a bit of exposure to them. If we look at past performance, a bit rockier but still a decent return over 10 years. For example, if you'd put $10,000 in 10 years ago, it would be worth $17,854 today, a 78.5% increase. Not bad. Nothing in comparison to VUSA, but it's nice to have a little bit of diversification. Plus, with the emerging markets going to be a force to be reckoned with over the next decade, the price could skyrocket. And the distributions, the yield is 3.5%. In comparison to VUSA 1.29%, it is 2.7 times the yield, but does not have the same price growth. So by having these two ETFs, I get the best of both worlds. As usual, thanks for watching. If you've enjoyed the video, please like and subscribe.